Let's go. Happy Monday, everybody. Good to be with you. If you're on the call, man, you serious about your business. You right on time too, man, if you're right here right now. Guys, if you're chiming in from YouTube, welcome. Those of you on the call with me, welcome, welcome. Good to be with you. Let's go. We're going to get this party started right now. Got a lot to talk about tonight, okay? And let's make sure we get all our people in the call. Boom. There we go. And let's go, guys. If you didn't know, now you know that's me. Look at that guy, Cheston Bulgin, with Bind the Books Consulting, the founder, CFO, tax strategist, your accounting superhero. And that's how you can reach us. You can reach us, number one, at 888-4BTB now, or 888-428-2669, or on the web, youraccountingsuperhero.com. You can email me, cbulgin at youraccountingsuperhero.com. And if you haven't followed me on Instagram yet, you may want to do that at youraccountingsuperhero. And guys, what I found out, man, we deliver what we call peace, ease, and clarity for business owners like you. And that's what we get to deliver. And I'm seeing it more and more each day. That's the thing that we get to deliver. We get to alleviate all that stress and chaos that exists typically inside of what you're dealing with, and give you a fast track to ease and clarity and peace of mind in what you get to do. We do it through the accounting processes, yes, but systematically we get to do that, give you an action plan in terms of business strategy, tax strategy. All that is what we get to do with people. Pretty exciting stuff. And make sure you book your session. You can do that still at youraccountingsuperhero.com/book-and-appointment for a pre-profit and cash flow analysis. The idea here is to stop wasting time and increase profits and cash flow today. Why wait, man? Why not just go ahead and have that happen in life? You can do that by booking a session with me personally or somebody on my team. And before we get started, quick disclaimer. The following is for educational purposes only and is not to be considered financial, accounting, or legal advice. Please consult your tax, accounting, and/or legal professional for specific advice. Let's go. All right, ladies and gentlemen. All right, it's good to be with you today. We've been in a conversation about financial literacy. My promise too, guys, keep hold me account to this promise and make sure I remember this, because I want to make sure you have access, whoever stays on to the end of this call, to get access to a free tax session with me. Okay. Let's make sure you guys hold me account to that yourselves, because I want to honor that promise to give you that call at the end if you stay at the end of the call. And if you're staying until the end and grab that session, the idea is to eliminate a lot of your stress behind taxes, number one. Number two, why pay more than you have to? Why not pay zero? Right? Why not pay zero taxes and have a track for you to be able to do that right away? Okay, so that's what I'm promising you today at the end of this session. Just stay on to the end and you'll be able to have that free call with me. Okay. All right, so let's get started with some things. Last week we started talking about financial literacy and fundamentals really for your trucking company. And man, I'm telling you, I keep saying this more and more every single week, how some things that I would occur as simple understanding that could lead to a lot of results inside of what you're up to in your business. And it deals with financial literacy, all right, fundamentals of financial literacy. We started talking about these things here last week, the fundamental five. Number one is income. Good evening, my YouTube peoples. Good evening. So number one, let's do it like this. Number one is assets. Two, liability. Liabilities. Three, my fingers do that, man. My typing it's like, what? There you go. Liabilities. And then we have equity, number three. Then we have number four, income. Number five, expenses. So fundamental, we want to understand how to master money flow. And this is how we do it, man. We understand how money can flow inside of this realm. And there is really not any flow outside of this realm when it comes to money. Okay. So last week we talked about assets. Pretty cool conversation about current liability, current assets and fixed assets. Today I want to start talking about some liabilities and how we can use those and how we can stay away from trouble if we understand the fundamental of liabilities inside of what you're up to in your trucking business. Okay. Man, I got to take a sip of water every time I get on this call, man. It seems like by this time of day, I've already been talked out, and it's apparent in my voice, man. There we go. And it just shows you have a lot of conversations during the day with people. Okay. And that's what that is. And to be straight as I'm present to it, man, it's exciting to be able to make the difference, man, when people get on a call and see exactly what to do. I had some real powerful calls today with people to shift some things inside of business and in life on those calls. And there's no place I'd rather be than to be there with that. And I'm glad I get to do that here to a degree with you guys. So when I'm saying that, I want you to be able to take on what we talk about here, take it on, and own this so that it delivers in life. I'm sidetracking here for a minute, but not really. Okay, because a lot of the time information is pretty cool. We can get information about things, but it's really magical when we're able to connect the dots and put the pieces of the puzzle together to deliver outcomes for life. How much time do you go through life and it's like wasted because you don't really use what you've learned, or you don't really understand how it relates to what you're up to. So you never really get the benefit of applying this in real life and having like that result based on the application of it in real life. That's not what we get to do here. We get to do something completely different, which is go out here and crush it because you have a new understanding of things. I continue to do this in my life. I read stuff, guys. Like I'm constantly looking to gain a new level of insight in what it is that I get to do. So I grab onto something, like I grab onto a vein of a particular piece of understanding of a knowledge base. Like I'll grab onto a study, all right? I'll go deep dive into things to ensure that I get to level up in a specific area. Right now, I'm leveling up when it comes to my understanding with how things come together globally, economically, and how it ties together in your business and my business and what kind of decisions we get to make. And guess what, guys? This stuff that we talk about here is a part of it. You get to take that on for yourself and really, really go to those next levels that you've never been able to get to simply by taking some of the things that we talk about in this conversation on. All right. Hopefully that makes sense and that you're willing to go in here and take on, like, especially like in the moment right now, like when you go out of here in this conversation, look to apply it specifically in a certain area of your business. Go look at your financial statements, right? And go look at, your balance sheet, go look at your profit and loss statement, understand what we're talking about here, understand what type of decisions are available based on the conversations we've had in this session together, and make some choices, new choices that'll give new outcomes. That's my request from being in this conversation with me. If you're willing to take that on, put a one in the chat. If you're willing to take that on for yourself, put a one in the chat. All right. Super important, guys, to respond that way when we come up with the call to action in that way, so that we line ourselves up with outcomes in life. And that's what we're doing here in this call. All right. So last week we got to talk about assets. This week we get to talk about liabilities. And the thing I would want to get to in terms of liabilities in this conversation is, well, how are you going to benefit from understanding liabilities when it comes to your business? What is a liability? If you know what a liability is, put that definition in the chat for me. If you know what a liability is, put that definition in the chat for me. This is an active conversation tonight. You guys didn't even know, right? You didn't know you were going to come here and have an active conversation. Yeah. So definitely be here with me in this and do that for yourselves. If you know what a liability is, put that definition in the chat right now. Tell me what a liability is. All right. I'm going to give you about 90 seconds to do that. Like explain to me what a liability is. while you're doing that, I want to share some things with you, particularly about business in general. Like when it comes to mastering business in general. And I don't have it that I have everything put together. And when it comes to business and businesses, and you know, because of that, I get to keep in the hunt, stay in the hunt for deeper meaning and understanding of how to make sure businesses are successful in life. Now, what I found in the decades, right, the decades that I've been at this, is that this subject that we're talking about is a crucial component of the success in business. And, you know, I've seen people come in and they have talent and they're able to go out here and create money in business, even like millions. Like, man, some people are really talented to go in and drive business in, which is fantastic. And then, well, how do you make sure that that's sustainable? How do you make sure that that's continuing to grow? How do you make sure that you don't have to look over your shoulder when it comes to compliance, like the IRS coming after you, or the state revenue department coming after you, or other compliance agencies coming after you for you not doing what you need to do, right? These are some things that if we master these aspects of business, man, you get to master life because of it, and it's exciting. Good, man. You guys are sharp putting some answers in the chat for me tonight. Let's go, man. So what are these answers that people put in here? All right. Liability is anything that costs you money. That's good. I like that definition, right? Because it would occur that way. It's something that would cost you money. Okay. And Robert Kiyosaki, we talked about this last week, I believe. I brought up Robert Kiyosaki, and his definition is what you're talking about. It's not really how you said it, but he says, a liability is something that takes money out of your pocket. All right. So liability is something that takes money out of your pocket, according to like Robert Kiyosaki's school of thought, which is fantastic. I love that school of thought, by the way, because we can get in reality of, well, actually, are these liabilities, are these assets really delivering, or are they really underneath it all a liability to me in terms of my decision making, right? And I want to really get clear on the technical definition of it, which is a little unique besides that. Okay, so let's take a look at some of the other responses. A minus to business assets. I like where you're going with that one. Minus to business assets. Uh, Technically, it's not exactly that, minus the business assets, but I can see where you would get that, because you don't, like, I'll bring it to this point, okay? If we have business assets and it's not fully funded by our own money, we've borrowed money to fund those assets. Well, technically, I don't have a lot of value in that myself. I don't have a lot of equity in that myself, okay? Which is a real good thing to point out in terms of that definition, like a minus to business assets, because you don't have all that equity. That asset's not technically all yours, really, because you don't have everything in it, which is not a bad thing necessarily, okay? And I want to keep going and see what other people have put in here, okay? It says the opposite of an asset. Yeah, right. LOL too, right? Yeah, it's the opposite of an asset. It's technically debt, I believe. Yeah, that's what it is. It's debt. What is debt? Debt is money that I owe somebody, right? It's money that I owe to somebody else. It's a liability, right? So get this, man. If we pay attention, a lot of what we deal with or see around us is based on this whole debt servicing principle for life. The money that you have in your pocket, if you still have money in your pocket, I don't know, you know, the generation above used to carry this little knot of cash, that little wad. Uncle always had that little knot or wad of cash in the pocket. I don't know if we have that consistently today with folks having that piece of cash that you hold in your pocket all the time. But if you had that piece of cash in your pocket, that note, that note, which is there's a dollar bill or $100 bill or whatever your currency is, right? Is a note. That's what they call it. It's a note. It's really a debt, right? You're carrying debt, you know, and it really is a promise to pay money. It's a promise for money, is what that is. It is a debt. It's a liability. It's an IOU, really. Even a dollar is an IOU. It's debt. And so it's around us all the time, is liability. Now, it's a cool concept because, you know, money itself used to be tied to tangible assets, which means it used to be tied to gold way back. It was like, okay, so in the US, we had the gold reserve standard, the reserve standard. And so it was a claim on the reserve. So if you had a dollar, you could claim like that worth that amount in terms of gold. It was backed by that. But what happens is that, you know, the government issues all these notes, these dollars, when in terms says, okay, we owe you this gold for the dollar that you have. And they start printing more money than they have gold. And then it becomes an issue. Okay. It becomes an issue. And we don't necessarily see that all the time. Why am I saying this in this conversation? And how does it apply to you? Okay. The understanding of liabilities. Liabilities became very attractive for business purposes because if I have an idea and I know I can make money from that idea, that is an intangible value that's worth something, right? And I can use leverage to get that moving forward in life. When I say leverage, I can go out and say, "Hey, look, my friend or my colleagues, I have this idea. I don't have money for it yet. I'm looking to raise some of this money in order to put this idea into reality. Here's my plan of action. Here's my team. This is what my team has done so far. These are the things that we're looking to do, and we have a high probability that we can do it in this market. These are the people that we're looking to serve, and all down the line, right? And the colleagues and the friends are like, man, that sounds fantastic. I want a piece of that because it sounds like a sure thing. I'll loan you the money. I'll loan you the money to get this done, and you can pay me back in interest. Okay. Now they give that money to the business owner to create this value, and the expectation is that the person who loaned that debt will get that money back at a certain point in the future with interest. Okay, and this is what a liability is. All right, this is a liability. Now, how do we leverage this tool? You guys are doing it all the time, and but I get here's what I get about what I see with a lot of us. Okay, especially in the trucking industry, a lot of you in the trucking industry, you go get financing for things, and it's great to get financing to get equipment and all these other things, and it's fantastic because you have easy money now. Well, not necessarily easy, but you get it, so that you're not stuck waiting to get the thing that you want to get to do the thing that you want to do. Okay, and what I've seen is a lack of understanding of the impact. Okay, it may be in the background, but we don't get it like in total in like totality. Because sometimes we're just doing this without really weighing the actual cost of the liability. If we can understand like the decision we're making at the time, if we take on certain debts, then we'd be mindful of how we would do that. Anybody ever hear of these merchant cash advances? Put a 2 in the chat if you've heard of MCAs, merchant cash advances. All right. Put a 2 in the chat if you ever heard of this. Okay. Yeah, there we go. Got some 2s coming in. All right. Now, dude, your phone will blow up. All right. Your phone will blow up constantly all day long if you ever get on one of these lists. People that you take this money from people who purchase cash advances, they say, okay, we got a low interest rate, but not really. All right, it's really like 103% interest or something like that if you really look at it. All right, and you taking the money right now, and the impact of it over time is like, well, it's a cost to your cash flow for a good long period of time. It may be detrimental to your business cash flow wise because it's a quick fix and you're not able to fulfill on the promise to pay back, not realizing what you get into. Okay. So basically that's a short-term loan, right? With, they'll loan you, $10,000, but have you pay back 15,000 in 90 days. Okay. And that type of deal. And you pay it back daily pays, another terminology for it. You have a daily pay loan. All right. So people get into those situations because they think, okay, if I get this now, I can do something with it. Maybe you can maintain operations and pay for like payroll and other things like that, which is not really a good idea, not a good strategy. Now, I'm not saying that all debt is bad in this. I don't want you to be left with that. What I really want you to be left with is actually understanding how to deploy debt in life in a way that works, right? So we're talking about liabilities and how they impact you financially in your trucking business. So There are different financial indicators for health. And if we take a look at these financial indicators, we can get a quick gauge on how healthy your business is by understanding what that is. Okay. So, KPIs when it comes to debt. Well, I want to say comes to liabilities because we're talking about liabilities. Another term for liabilities is debt, money that we owe, something that we owe. For this conversation's sake, okay? That's what I want to really hone in on. Because if I can get here with this, if I can be here with this, then I can start to understand how to make decisions and powerfully and really create what you want inside of your business from this understanding. Okay. So talk about liquidity ratios. Liquidity ratios. Now, the one thing I want to talk about in terms of liability is understand what it means to have liquidity ratios. So what is liquidity? Anybody know what that is? Just do that. Put that in the chat for me. If you know what liquidity is, put that in the chat. If you know what liquidity is, put that definition in the chat. Yeah, man, it's active conversation tonight, really. Okay. Liquidity. What is liquidity? All right. And we want to have this. All right. Liquidity is a good thing. And it's like a couple of things. I was actually studying up on some things, just reading about, going back to fundamentals, going back into fundamentals and understanding what it is to have these components in place for life. Yeah, good job, man. Free cash available. Good. Good. That's liquidity, having free cash available. Fantastic. That's a really good definition for that. All right. Yeah, it's having cash available, free cash available, having access to free cash, really. Right. Now, I was looking at, some of these basics in terms of just going back to the fundamentals um, this year and really getting an understanding of what happens when people don't understand how to set themselves up to win in this area with liquidity. And even when it relates to taxes, right? And all of that. And when it relates to inflation and all of those things, right? So I'm getting into like little nuances of it in terms of what I'm diving into. But basically, there are plans that you want to have in place to ensure that you have access to cash, free access to cash. What's impacting the free access to cash when it relates to liabilities, though? Okay. So can I be in reality with things is the question. Can I be in reality when it comes to, do I have liquidity? Yes or no? Can I be in reality with this? One of the ways to get in reality with where you stand with liquidity is having liquidity ratios. We call it liquidity ratios, a couple of these, okay? Current ratio, quick, quick ratio, okay? These are some basic liquidity indicators, like liquidity tests per se. These are two similar tests, by the way. They're not too different. So current assets over current liabilities, okay? That's pretty much what the current ratio is, current assets over current liabilities. That's a formula, all right? You take your current assets and divide those by your current liabilities, that gives you a number. That number wants to be greater than one, all right? It never wants to be less than one, all right? But it wants to be greater than one. A really good liquidity ratio would be to have a 2-to-1 ratio there, 2 times current assets to current liabilities on that. Why? Why is that important to have? Well, it means I have more than enough to cover my short-term debts. That's what that means. That's a healthy position. If I have twice as much money to cover my short-term debts of what they are, then I'm a healthy company. I'm in a healthy range. Okay. If I have 2 times my debt in current assets, well, what are current assets again? Right. And we're going to, like, current assets are cash in the bank or cash equivalents, like, maybe money markets or, publicly traded stocks that you can get rid of in like short term, like sell offs. right? Accounts receivable, people that are that's going to pay you on invoices in 30 days, 45 days or less, right? Inventory is considered that in the current ratio, right? Those are things that are considered a part of this equation. Like you can turn over and you can sell some stuff and get that money and very quickly and convert that to cash, right? So those are some things that we can consider in terms of the amount of assets that we have versus the amount of short-term debt that we have, short-term assets over short-term debt. Okay. And the higher that number, the higher that number, the healthier you are when it comes to that. Okay. Now, I don't know how many of you actually take a look at that number, that ratio for yourselves consistently when it comes into taking on things like that. Now, you may have the hopes of achieving that even in certain situations, like you may not have like a whole lot of cash in the bank and you're taking on maybe some short-term debt, like a line of credit or something like that that comes due like in a month or credit card, something that comes good due like in a month. You may borrow these funds in excess, say, okay, I don't have the cash now to cover this, but I know if I get this new if I use this credit line to go out and you know get a piece of equipment, I'm pretty sure that that piece of equipment will deliver. Some of us operate this way, and it's not a bad thing to operate that way. The thing is, if you're not doing your due diligence, this will be a part of doing due diligence, okay, inside of making your decisions. Because if you make those decisions and it puts you under in these ratios, well, now you have put your business at an extreme risk. And now there's a high probability that your business will fail. Okay. Just like going to the doctor, man, and he says, like, okay, well, I know you like, ham hocks, pork chops, and fried chicken. Right? I know you like that stuff. And but your blood pressure is like 200 over 120. Keep going that route, your cholesterol is about 300. And they say all this stuff, and you say, well, I'll get on my diet and I'll take my medication next week. All right, I just want to have this one last good time, right? And then you figure you take that one last good time, and there is that one last good time for you in life, right? That'd be the last hurrah because you haven't really made a wise decision. You haven't done your due diligence in terms of understanding the positioning of it. Now, if you're, you know, 15, 25 years old and you don't have those issues, then maybe, yeah, you can get away with having some ham hocks and fried chicken or whatever that is, right? But, if you're pushing, 50 and your blood pressure's at 200 over 120, then you don't want to take those chances. All right. Now, let's relate this back to business. Okay. Now, if you go ahead and make these decisions based on what you think could possibly happen, and you're not doing your due diligence, then you can put your business in a position to suffer failure or be in a bad position for a long time, and you're experiencing a lot of stress, and you don't even know where it came from. It's only because you didn't check these boxes here when it came to, okay, how's this going to impact my financial position in terms of liquidity? I might not want to do that now. Let me get my cash reserves up. Let me hold off on this for now. All right. And just make sure I get solid here before I take on any new debt. Let me pay off some old debt first and improve this ratio. Then I'll go ahead and make that decision and then bet on myself in that way. Okay. Hopefully this is a helpful conversation to be inside of, guys. Liabilities are debt. This is money that you owe. Okay. And we can use this to make sound financial decisions in our business. Debt is a fantastic thing when we use it right. We use it in a way that works. And it's a hellish experience when we don't. And I want you to go out here and have the best of best experiences in everything that you do and have the results that you're here to get without wasting time, without having to suffer, without creating extra stress. You can do that by having this understanding, but not just having this understanding, putting it into action. Guys, it's been great being with you tonight. Look at the time goes by fast. Next week, we're going to talk about some equity. All right. Talk about some equity next week. All right. In terms of how that applies to you and your business and making decisions. I want you to play around with this concept for yourselves this week because there are so many other things inside of this that we did not go into, and I could go forever with this stuff, man. All right. And I want you to play around with these concepts in your business. Start measuring these things, guys, and look at these indicators. See how well you're doing with your business health. Are you even tracking this the way that you want to track it to get the reality of the situation so you have this in front of you? If you're not doing that, put those structures in place, please, for yourself is my request, so that you can win all the time with a high degree of certainty. That's what we're here for. Guys, have a great rest of your week. It's always a pleasure being with you, and I will talk to you next Monday. Take care. Have a great week.